Hello friends, this is Dr. OG Crypto, your mentor and your tutor for your trading journey. I'll be introducing you to the best forex and crypto trading course for a total newbie or an amateur or a professional trader. My goal for creating this course is to make it for free and even make it more relatable and better than any trading course that you can buy for $1,000. So today we'll be talking about chart patterns. You understand? We'll be talking about chart patterns. So, in the other video, in my last video, I told you about candlestick patterns. So when you are considering one candle or two candles or three candles, but once you are considering up to like four or to like countless or a number of candles together, then we refer them is no more called candlestick patterns. We now refer them to as what? Chart patterns. So there are three types of chart patterns. There are three types of chart patterns. So we have continuation patterns. Once you spot those patterns, they are for trend continuation. When we say trend, maybe the market is going in uptrend. You understand? So they are for trend continuation. It's for the market to continue going in uptrend, 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 uptrend. You understand? So once you spot that pattern, they are for trend continuation. There are some patterns, chart patterns, that once you notice is for what? Trend reversal. So market will start going in the opposite direction. And some patterns, once you spot it, is just neutral. You understand? It's neutral. So it means that nothing is really going on. So when you spot a neutral pattern on the chart, the best thing you do is that you don't trade. You don't trade at all. So when you see that market is just is just consolidating, the market is just consolidating, moving in this manner. Once you see market moving in this manner, you understand? So the best thing you do is that you don't trade. Instead, you wait for the breakout. You wait for when the market will maybe break down to the downside, then you look for short opportunity, or let's say break down to the upside, then you can now say, okay, you are looking for a long opportunity. Do you understand? So that is that. So since we've taken neutral pattern out of the equation, so now let's consider the other type of trend patterns, chart patterns, which is what? Either a continuation pattern or what? Or a reversal pattern. So there are a lot of examples of continuation pattern, a lot of examples of what? Reversal pattern. So example of continuation patterns now, because if you look at, we have like over 60 chart patterns. Chart patterns are very, very plenty. We have a lot of chart patterns, you understand? But you cannot cram all this kind of pattern. You cannot cram it except you are a pattern trader. But the strategy that I'll be teaching you is called smart money concept. And that is a concept that is actually stronger and has a higher edge. It will give you an upper edge than any other trader out there. You understand? Even more than people that trade support and resistance, people that trade volume, people that trade indicators, people that trade chart patterns. So SMC is actually like way more better. And also the kind of profit you'll be seeing with chart patterns is just small profits. You understand? But when you are using SMC, you can catch a bigger move. You understand? So there are over 60 chart patterns, but I will just tell you the important ones that you must know. The way I am teaching you is so that nobody can actually cajole you or use another word and you'll be like, oh, I've not learned this one, so I'm not a complete trader. Yes, no. I want to make you a complete trader, a complete profitable trader. So we have for the continuation patterns. So out of all these over 60 chart patterns, they are all grouped into what? Three different types. It can be a continuation pattern, it can be for reversals, and it can be neutral. So for neutral, just rectangle. When you see market moving in a rectangle, make zigzag, so you don't trade at all. So that one is out of it. Then let's now go to continuation patterns and reversal chart patterns. So example of continuation patterns, the important ones that I will just tell you, you understand, is ascending triangle, descending triangle. You understand? All those ones are for continuation. When you see ascending triangle, descending triangle, they are for continuation pattern. When you see bearish flag, when you see bullish flag, they are for continuations. You understand? When you see bearish wedge, when you see bullish wedge, they are for continuation. When you see symmetric triangle, they are for what? Continuation pattern. Now, what are example of reversal pattern? When you see an head and shoulders, or you see inverse head and shoulder, they are for what? Reversal. When you see a rising wedge, they are for reversal. When you see double top, double bottom, is for market to reverse. When you see triple top, triple bottom, is actually for market to reverse. So now we have other ones too, like over 60 chart patterns, but these are the important ones. But out of these important ones, I will just tell you the one that I normally use that you can combine with your SMC pattern. So it's just let me say it's just two. It's just two, which is what? Uh uh Bearish and bullish flag pattern. Bearish and bullish flag pattern, then double top and double bottom. Double top and double bottom pattern. So these are just the one that you should concern yourself with. You understand? All other ones, disregard it. Just know it for knowing sake, or so that one person will not tell you that you don't know what you are doing. You understand? But the one you can be using to trade that is profitable, you can just be using bearish flag and bullish flag, double top and double bottom pattern. Now, how does this double bottom and double top forms? They forms like this. Double top is like you are forming an M. Once you see market forming M pattern, you understand? So that is what? That is double top. So you can see double top. That's double top. That's double top. So once you see market forming W, when you see W's in the charts, W's, so that is what? That is double bottom chart pattern. So how do we trade this? You just locate the neckline. Then you short from for this one, because the market is coming down. So you short from here. You place your short trade. This will be the entry. The neck will be your entry. You target this place, then your stop loss will be a little bit here. You understand? Though when we later on, when we go to smart money concept proper, you will still see that this one, there will always be something that is printed here, what we will refer to as breaker block. You understand? Don't worry, you are going to learn more about it. But this is how to trade a double top pattern. You check for the neckline, then you short from there, then you set your stop loss a little bit above the M pattern. You understand? So that is how it is. So let's see if you can see example. On the chart. Double bottom 2. Once you see market form W, so you long from the neckline. Let's see if you can see example. That's the thing. They are not really always easy to come by like that. So, but once you see them, you trade them. They are not always easy to come by. And another thing is that I don't trade them singly. Most especially double top and double bottom but I can trade a flag pattern. I can trade only that. You understand? So see example now. You can see that this thing form M. You can see it, that it form a capital letter M. Do you understand? So you can short from the neckline. This is around the neckline. This is where the neckline is. So you can short from here. So you can see that the market reverse back. It's entered the place and you can make some profit. Can you see profits now? Can you see? So that is how to trade double top, double bottom. So your stop loss will be a little bit here. Then you take profit, you see. So this is 1:3 RR. 1:3 RR, meaning that if I risk $100 on this trade, I will make $333 on this trade. So that is it. So it's not hard at all. Let me see if I can see W. So you see W, I think this one did not form W very well. No, I think it formed W. So can you see this one from W, you can see got this place for here, so I can long from the neckline. So this is the neckline, so I want to long from here, you understand? Though this one played out, but it did not play out very well. That is what I'm telling you. You understand? You see, it played out. My stop loss will beat a little bit what? A little bit below. A little bit below. Let me set it like this. So this one is 1:2. It gave us 1:2 RR, meaning that if I risk $100 on this trade, I will make what? $200 before the market reversed. I'll make $200 before the market reverse actually. So that is that about that, you see. So you can see that this thing formed W. So just notice the neckline, draw a line from the neckline, then you place your trade. The market will come and pick it from there. So that is that about double top and what? Double bottom. That is that about double top and double bottom. You short or long from the what? From the neckline. So after that being said, let's move to the next part of the continuation pattern. Okay, so the one I talked about, which is double top and double bottom, is an example of a reversal pattern. Is an example of reversal pattern. Why example of this reversal pattern, double top and double bottom. Why example of the continuation pattern, when we say bullish and bearish flag pattern. So how does this one looks like? So this bullish and bearish flag pattern, this is how it looks like. Like you will see that the market is rallying up. The market is rallying up, forming higher highs and higher lows. Do you understand? Then you see small consolidation. You see once you see a consolidation like this, just like a correction, a pullback. You understand? Once you see that the market is about to break, once the market break this consolidation like this, it can just come and retest it, and the market will go up impulsively. It will break out massively. It will break out massively. So what you are just going to do is that once you see that a market come like this, you see is doing a massive rally to the upside. You saw a massive rally to the upside. Then you see that the market is trying to consolidate, that is forming small reversal pattern, where reversal candles, small printing small reversal candles or correction candles. Once the market break that line that you draw, the market is going to go up impulsively. It's going to go up impulsively. So you set you long from here like this, from this line that you draw. Once the market break that place, you long and you make insane profit. Same thing for shorting too. If the market, you see that the market is just coming down impulsively, just coming down, the market is selling impulsively, then you see that the market is now doing some consolidation, like a correction to the upside a little bit. So once the market break that line that you draw, a particular trend line that you draw, just know that the market will just retest, then it will sell down impulsively too. It will sell down impulsively. So you can just draw a line like this. So as the market break that place like this, so you know that okay, there is a breakout. So then you sell it. So some people call this bullish flag pattern and bearish flag pattern. You can also call it breakout and retest strategy. Breakout and retest. So once market break out of those consolidation, then it will retest the place and the market will go up impulsively. Some people call it rally base rally. Once you see that market rally, then it's doing like it's coming down a little bit, then that's your base. Then once you go up, it go up more. So then this one was drop, base, drop. So that is that about that. So that is that about bullish and bearish flag pattern. So let's see some example. I screenshotted some examples for you so that you guys will understand it very well and very better. You can trade those ones singly. Like you can just be using that strategy alone to be making profit. Once you spot it, then you are going to trade it. So that is that. So let's look for bearish flag and bullish flag. So you see bearish flag, market was dumping, then it is as if it's consolidating, then immediately it breaks out of that consolidation like this. Then you set your entry, set your stop loss a little bit above, then you target. Then for longing, so if you are longing the market as well, look at the market rally up, then it was consolidating. Once it break above that place, that consolidation line that you draw, then you can be sure that okay, you are ready to long the market. So that is that about that. So let's check more example of the chart patterns. So you see, for bullish flag, once you see a rally, the market do down, immediately break it, the market is going up. So this will be your profit. So you see market dumped, then it's reversing as if you want to do a reversal. No, it's continuation. Once the market break this line that you draw, then it will come down bad. So that is that. Let's check more example. So can you see it on a real market? Real market will not show you very well. Real market is just going to show you like there will be a lot of zigzag. So you see, the market was coming with full impulse. It's coming with full impulse, then it started consolidating. What you do, you just draw your trend line. So use trend line to actually draw it. So then you see that the market broke the place. Immediately it broke the place like this. So you just set your entry that the market will come and retest it and go up. You understand? You make your profits. So look at for sell too. See, for sell too, the market was selling impulsively, then it started correcting in a way that is doing as if you want to start going up. But you see that you draw some line like a channel, immediately the market broke it like this impulsively. So you are like, okay, this place has been broken, so therefore you place your entry. You see, this one is the re-entry. That's your retest. Then you make all these ones are your profits. These are your profits. So that is that about flag patterns. Let's still check more example. So you see this is a real life example. Now this is a real chart example. See that the market went up, it rallied up, then it started coming down, consolidating. Immediately it broke that place. Then you can set your entry. So you target till when the market starts doing as if you want to come down again. So that's where your target will be. Your take profit will be. Let's see another example. So can you see the market rallied up? After it rallied up, then it started consolidating, coming down small. Once you see something like that, you wait for it to break out. You see that it broke out of that place. Immediately it broke out of that place, you come and place your entry. So you place your entry, the market pick you make profits. So your target, this is not even where your target will be. Your target will be where you see that the market is trying to do as if it's consolidating. It means that it's tired. So then you can now close your trade or set your take profit. Say, okay, it's 1:3 that you are looking for, or 1:2, and so on and so forth, like that. You see, the market dumped, then it did some consolidation as if you want to start going up. You see that it broke it, immediately it broke it, just set your entry. You understand? Then you make your profit. So that is that about chart patterns. There are a lot of chart patterns, but the one that I want you to just put on your head are two. One for continuation pattern and one for reversal pattern. So under the continuation pattern, the flags, whether bull flag or bearish flag, you know how to use them, and I've explained how to use them for you. Then for reversal pattern, you can use what? Double top and double bottom. So by the time we start SMC concept, you see that you don't need other types of patterns again, chart patterns, because chart pattern trading is actually another strategy of trading, but it doesn't give much profit as much as this strategy that I want to teach you, which is SMC strategy. So let's see if we can see some examples of this flag pattern and all that I want to teach you. Yeah, you can see this one, for instance. You can see the way the market did. The market started on a rally. You can see the rally. Then it started doing as if he wants to dump, right? So after he broke out from that place, then you set your entry. So if you set your entry around this place, see profit. You can take your profit here. You can take profit in this upper side anywhere. Let's say we take profit here. Let's see how many profits percent that we made. Let's see how many profits we made. You see, so if I risk $100 on this trade, I'll make $650. So that is how it is. Guys. It is very simple. So once you see a rally up and you see that the market is trying to consolidate to the downside, then you look for it. Then you set your, once the market break that place, you set your entry and you make some cool profit. So that is that about chart patterns. So as I've said before, the rule is that you don't trade them in isolation. If you want to use other types of chart patterns, you combine them with some other influences, like maybe the support and resistance, with trends, with news, with volume, and so on and so forth. But these ones that I taught you, like this double top and double bottom, you can combine it with SMC, but the bullish flag and bearish flag, you can actually trade those ones singly, because another reason why I like this bearish flag and bullish flag is that once market break out from that continuation, from that consolidation, the market will go up massively or dumped massively. You understand? So you are going to make a lot of profits. So the goal is to catch it. So thank you very much, everybody. So in our next, let me see the next topic on the syllabus. So we've covered chart patterns. So we'll now move to indicators trading in crypto and forex. So see you in the next class. Bye.